So what private equity essentially means is private equity investors are a class of investors that represent private capital. So I'll take a step back. Using the word private implies that somewhere in the ether, there's a public. And so public equity relates to companies that are publicly listed. So companies that go out and list themselves on a stock exchange, the New York Stock Exchange, the NASDAQ, here in the United States being the two most prominent exchanges. You're listing you're listing your equity for sale in those public markets, and there's a marketplace that allows the buying and the selling of equity in your business. Those are public markets. Conversely, private equity relates to private markets, meaning capital that's not publicly traded, that's not publicly listed, oftentimes capital that may not involve immediate liquidity in the same way that public markets offer immediate liquidity. And from a structural perspective, when people talk about private equity, what they're really talking about are private equity funds. And a private equity fund is a structure which involves two parties. You have a manager entity, oftentimes referred to as a general partner, who's involved in managing the business on a day-to-day basis, making investments on behalf of the vehicle, and ultimately being charged with making prudent investments that are going to generate profit that they'll then distribute to their investors. So you have the general partner, or again, the managers, and then you have the investors in those private equity structures. And those folks are often referred to as limited partners. And limited partners are really meant to be passive. So if we had a relationship, you and I was the general partner of the private equity fund, and you were the limited partner in the private equity fund, your role would be, and your primary responsibility would be to write the check and then sit back and, trust in me as the manager of that business to construct a portfolio that would be accretive and return capital to you. If our private equity fund were structured as a limited partnership, which again involves a general partner and at least one limited partner, the limited partners are actually precluded from engaging in the management of the business because they're able to preserve liability. They're able to preserve indemnification really from certain liabilities because of the fact that they take on a more passive role. If you took on a more active role, you would incur or be exposed to potential liability as it related to acts or omissions undertaken by that business.